So we're looking at the Bitcoin. We're looking at the Bitcoin weekly chart here. And so pretty good week for crypto. If you were to have invested last time when we were talking last week, you would be up just about 28%. So really, really solid week for Bitcoin, especially after a lot of these bearish weeks in the past. If people remember from last week, I had mentioned that the past 6 candles have been following the same pattern that started at the beginning of July. And so this week followed in suit, where you can see we had doji candle and then a really big upswing here. So as you can see, the same pattern happened again. We had a doji candle and then again a big upswing. So if we were to continue to follow this, we could expect to drop down to the 7,400 level. So I have some pretty high conviction that we will continue to follow that, just because this has been following the past candles. So it'll be really interesting to see if we continue in this pattern. To jump over to Ether. Again, another really good week for Ether. If you would have invested last week, you'd be up almost 38%. And what's interesting is if you look at the candle pattern here on the weekly chart, these past 6 candles have been exactly the same as Bitcoin. So again, if this was to follow in suit, we would expect a drop to around 460. So it'll be really interesting to see if these continue to play out. In other market news, researchers at the Bank of America, Merrill Lynch, put out a note that not only is Bitcoin one of the greatest asset price bubbles in history, but that the bubble is already popping. And I personally have a really hard time when people throw this out there. I kind of do it when they make the claim that we're like it's the same as the tulip bubble. If we look at the dot-com bubble at its peak, it was approximately 9.6 trillion. And that's just summing up all of the market caps and the NASDAQ. And the cryptocurrency market is currently sitting at 335 billion. So we have a long ways to go until we hit anywhere near the same market cap as the dot-com bubble. In other news, Gemini is rolling out a Bitcoin and Ether block trading feature, which basically allows for really massive orders to not be seen in the order book until they're filled. So to be eligible for this, you have to have at least a minimum order of 10 bit or 100. But basically the point of this is so that these really massive orders don't influence price before they actually are filled. In other news, the debate on ASICs continues. So overall, just to recap, miners are angry about the potential use of ASICs because that basically makes their entire mining investment obsolete. Many of these miners are lashing out at the creators for not doing enough to support the people who have basically helped bootstrap the network to get to where it has been. But then on the other end, the counter argument is some believe that the anti-ASIC efforts are akin to censorship.